One of the largest, sorry guys, this is loud. One of the largest options expirations ever just happened today. And a lot of data is suggesting, or rather maybe even predicting, the huge Bitcoin move we are seeing, and I think is going to continue on. Spot demand is back. We've seen about $3 billion of Bitcoin this week and last week, led by BlackRock. But I think the biggest factor playing out right now is that Fed Chair Kevin Warsh had his first Jackson Hole meeting this morning, and the markets are digesting his hawkish tone. I'll get into that a little more. But I think now is the time to be paying attention because, again, it looks like we are seeing the massive move we've been waiting for. Yes, we had a good, huge move last week, but right now we're all wondering, are we out of the bear market? Is the bull market just beginning? Are we going lower, or is this just a bull market-esque correction? Will it be another move lower as the price action today suggests, or as the options expiration suggests, now that all the leverage is being cleared, are we about to climb higher out of the bear market and make it definitive? Again, we do have a lot of data suggesting where the price action levels that everyone's watching. I will update you on what the kind of latest data is showing us, where all the options expirations are happening and what that means for the price of Bitcoin. But the band is narrowing here. All right, guys, that's the first thing I want you guys to kind of take away from this video, that we are in a tightening range right now. And so if you're thinking this is the, we're going to BART to 50K, I don't believe that that's the case. Does that mean necessarily that we're going to get up into the 85K today or this weekend? Potentially, but right now we had a range from about, Nico said it a while ago. If we, what was the thing he always said? If we range between 80 and 60K till the end of summer, then I'm going to be really bullish. Well, last week, when we saw the mother of all short squeezes, we basically went from 62 to 75K, or I think it was 77K, about a 15K move. And then we were watching the 83K range. Now it looks like the range is somewhere between 83 and about 75K. Those are the levels that we're watching. So it's squeezed here. Now we have a very precise range of, once we make a move in either direction, we will know for a definitive fact what is going on right now. So until then, I will be doing some tea leaf reading. We're going to try to speculate, try to parse the information, figure out exactly where we stand. But first of all, I do have the Spark Notes on Kevin Warsh. So actually, before I go into this, for maybe people that aren't financial nerds like myself, we got Fed Chair Kevin Warsh, first Fed meeting in Jackson Hole, Wyoming. Now, the importance of this is obviously, this is the first time he's spoken in Jackson Hole, which is going to essentially set the precedent for how Kevin Warsh will lead the Federal Reserve. One thing that he said in particular, though, that I did find interesting, he's like, hey, this is my speech. I'm going to give you kind of a blueprint, a framework for how we are going to be doing this moving forward. This is not, and he specifically said, this is not forward guidance. And that's one of the things that Kevin Warsh, Fed Chair Kevin Warsh, has been battling against. This idea of everything coming out of the Fed is forward guidance. So basically telegraphing what they are going to be doing. It seemed as if from this speech, he's kind of, instead of leading the market, more reacting to the information. I think that's what he's trying to set as the precedent. But again, Spark Notes of what happened, which is, I think, why the markets are kind of down this morning. And I will expand on what I'm watching and kind of the takeaway from this morning's price action regarding and reacting to Kevin Warsh. So shout out to Bull Theory IO on Twitter. They do. Kevin Warsh delivered his first speech and the tone was hawkish. First, inflation data doesn't show meaningful improvement, but the 2% target for inflation remains firm and fixed. I think he specifically said we have a lot of work to do in inflation, which I think is spooking the markets. I think that's probably the biggest signal. Again, if you aren't a FOMC or a Fed meeting watcher, a Fed meeting noticer, then you might not understand the different kind of mechanics, or maybe like the mind reading that goes on when these meetings happen. And they're as silly as, Jerome Powell starting his speech with a different phrase instead of good morning, or I forget what the other one is, like welcome everyone. Depending on what he starts his speech with, people would take that as a bullish or a bearish take, or a dovish versus hawkish take on where the markets are going. So now we're in a new regime here. And I think the biggest takeaway, again, is like we have a lot of work to do with inflation. And this adds to the other things he was saying. Second, Fed has more work to do unless underlying inflation moves toward target with speed. Again, that's trying to get inflation down to 2%. I think we just got the numbers and it was 3.7% inflation on, the core inflation, which doesn't really even account for the core essentials in life, specifically energy. Economy remains strong with healthy spending, stable jobs, and low unemployment. Business investment growing at its fastest pace since 21, nearly half tied to AI build out. Now, this one is interesting to me. It's something I've been saying on the show for a while, and it's something I think most of us either consciously understand, or better put, subconsciously understand. Guys, for better or worse, like literally the entire U.S. economy, and I would argue potentially the majority of first world, or rather more powerful financial economies, but that's kind of a oxymoron, but more powerful economies in the world, it's all being driven by AI build-outs. We've been seeing this happen in the ETFs. We've been seeing this happen in the equity like indexes. It's basically, literally, guys, and I've been saying this, the only thing keeping the economy afloat, or rather, the only thing keeping the perception of the economy out of a recession is AI. This is why you see so much hype in AI. I don't necessarily want to say it's a bubble, but this is why there is so much invested in keeping the narrative of AI being so spectacular, I think, is continuing to be spread. Because if AI bubble does in fact popped now or in the near future, that's very bad for the economy, guys. Again, the Fed chair just told us that 50% of what is holding up, half of what is holding up the economy right now is the AI build out. It's just speculation on AI, whether that's building data centers, whether that's the valuation in stocks in AI, or the IPOs coming in AI. AI is the only thing keeping us out of a brutal recession, potential depression right now. Dude, it's just AI. It's literally like the Wolf of Wall Street. It's all Fugazi. Yeah, well, the Fugazi aspect of our economy now is just AI. It's just speculating on AI. The AI build out, it's a nice way of saying the speculation on AI is the only thing keeping us alive right now, which is actually kind of terrifying. In a world of paper money, speculating on AI is literally the thing keeping half of the economy going. It's absolutely insane. Okay, now the next one. Question how long AI productivity gains will take to show up, and prefers a quieter Fed. Literally just saying exactly what I just said. And then on monetarism, said money still matters and the Fed should watch money created by the central bank and the banking system. That is very interesting. Obviously, it's the Feds. Like, Feds are the only, the Federal Reserve's the only one that can, quote, create money. So that is interesting that he said money still counts, and only, we got to keep an eye on the money creation, which read a certain way. It's pretty much a stark contrast to what Scott Bessent's basically saying. Remember what Scott Bessent's been saying the last couple of weeks. He's like, we can grow our way out of a $40 trillion debt. Oh, wait, we're going to suppress bond yields. Mr. Scott Bessent, Scotty B, how do you do that? You destroy the purchasing power of the currency. Scott Bessent basically admitted that they're going to sacrifice the dollar right now. That's what he's been saying the last couple of weeks. And now we have Fed Chair Kevin Walsh come out and say essentially, like, we still got to watch the amount of money created, the amount of dollars created. I don't think he understands yet. I don't think, maybe Kevin Walsh, look, I'll be less cynical. Maybe Kevin Walsh is going into this job fundamentally believing that he can do what he set out to do. And watch, whenever he walks out of, hold on, whenever his Fed chair job ends, I think he will be as demoralized as Jerome Powell was. Because you go in there with good intentions, and then you realize the reality of the situation, and you realize there's really nothing you can do. Yes, maybe you go in there and say, hey, you know, I want to be independent. I want to have fiscal responsibility. Like, I want to do a good job. And then you realize you're in a rock in a hard place, and all you can really do is just allow more money to be created, because that's all you can do. Again, fiscal responsibility sounds good on paper. Politically, it's just not going to happen. They just can't. It's no one ever is going to stop printing more money for themselves. And further, once the voting base gets comfortable with you giving them free money, you won't be in a job very much longer because you stop giving them money, okay? The second one is obviously just letting bonds collapse, but that would destroy the entire economy. That would destroy the world economy. Or you, quote unquote, grow your way out of it, which is just another way of saying we are going to run this money printer as hot as humanly possible and destroy the purchasing power of the dollar, aka the money printer is going to go burr. You know what I was thinking this morning when I was kind of getting the spark notes for Kevin Warsh's view and watching him? I'm like, you know what we need to do? I think we just need to update the Jerome Powell money printer meme and just put Kevin Warsh's face on it, because that's what he's going to do, whether he wants to or not. He did hint at the idea of hiking interest rates, which I think is the crux of what we're seeing in the market. So before I get into the options expiring and explaining that entire mechanics and why I think this is actually a good thing, I do want to explain at least my view of what I think I saw happen in the markets this morning. Yes, I know you guys were trolling me. I said Bitcoin's out of the bear market. We're going to head into the 85 to 90K range here very soon. That was obviously just thinking of Bitcoin in a vacuum. Now that we have this hawkish tone coming from the Fed chair, Kevin Warsh, obviously, how could I have predicted that he was going to do that? I don't know. You know, I guess I need to have a one-on-one call with Kevin before he goes on and be like, hey, bro, let me know what you're going to say so I can give you guys the good information. But I think what happened, which is very interesting dynamic. So if you're like me and you look at the markets every morning, again, me and Jeff Ross talked about this. There's a few markets that I look at every morning when I wake up. Obviously, Bitcoin. I look at gold. I look at Bitcoin priced in gold. I look at the U.S. bond yields, the 2, the 10, the 30. I added the Japanese bond yields because we all know the yen carry trade unwind idea. So I look at those. I watch the USD priced in Japanese yen. And then you go look at equities. You look at S&P 500. You look at NASDAQ, QQQ. You look at the Dow Jones, DJI. And then, of course, you can look at VIX. You can look at MOVE, which is VIX is volatility in equities. MOVE is volatility in bonds. And then you look at oil, WTI. What I saw happen this morning was very interesting. And someone in the chat asked earlier, right before I went live, he's like, is the 10 a.m. slam back on for Bitcoin? Are we seeing the quote-unquote price manipulation of Bitcoin at 10 a.m. happen from Wall Street? I personally don't think that that's what happened, because Kevin Warsh's speech was at 10 a.m. So that correlation to me is just not there in the sense of, oh, you know, Jane Street's back manipulating the price. No, it was the Kevin Warsh speech. And as we know, Bitcoin is the most liquid, saleable good in the market. So it goes back to this idea that Bitcoin usually sniffs out moves before the other markets do. And what I saw happen this morning, which at first I was kind of scratching my head at, we saw Bitcoin basically right at the Fed chair speech. It crashed. Well, it didn't really crash. It's at 77. It's hardly a crash, right? But it dipped. It's in the red. It's negative on the day so far. At that 10 a.m. time, well, it was really maybe like 10:15-ish, you know, Bitcoin went down. And then I looked at S&P 500, QQQ, DJI, and equities were up. And I was like, whoa, this is interesting. So you would think that maybe my initial read on this was like, oh, okay, well, maybe people are reading Kevin Warsh's hawkish tone as bullish for equities. Maybe they're selling the bonds right now because bond yields went up. If you're looking at the 2, the 10, the 30-year bonds, bond yields, they were up. Well, the 30-year was down because I think of what Scott Besant's been saying. But the 2 and the 10 were up. And I was like, oh, that's interesting. We're seeing equities down, we're seeing equities up and bond yields were down. Wait, I'm confusing myself. We're seeing bond yields go up, and which means that people are selling bonds because they're trying to get a better yield on those bonds. And it's a market. So that means the higher the yield means people are looking for some returns. And then as equities were up, S&P 500 was up, QQQ was up, DJI was up just for a moment. Then I start getting the show ready. And about an hour or so later, I look back at the charts. And now, again, about an hour delay after the Kevin Warsh speech, maybe an hour after he finished, we see before the show, S&P 500 is down, NASDAQ's down, Dow Jones is down. And then I'm like, okay, now that is making a more interesting picture for me because Bitcoin went down pretty much exactly when Kevin Warsh spoke. Bitcoin sniffed this move out like instantly, literally instantly, like in a real time, instant reaction to what Kevin Warsh said. And then finally, the equities market digested what he said, and they realized, oh, wait, maybe I shouldn't be buying these equities. Maybe this isn't so bullish for us. And then equities went down. And then I started to kind of think through the idea of like, I think Bitcoin just sniffed out this move and what this really means for the market and what investors are going to think about this move. And this is why I think we are seeing a dump today. I mean, 3K dump, bro, it's over. A dump for ants. And this is also why I'm still not really too convinced we're going to BART down into the 60K. And to add on top of why I don't think that that's the case, let's get into the options expiry going on. And I think this is going to tell us more information about what is going on and what the market is actually doing. So we were I was watching this last night and yesterday. We have James Van Straten of CoinDesk, and he goes, tomorrow, aka today, we see a 6.2 billion options expiry. Bitcoin faces a massive sell wall at 82K. Remember, I've been telling you it's around 81 to 83 is where the massive sell wall has been happening. That was in spot. In the options market, it's at 82, where 3.6 billion of negative gamma exposure is concentrated. If we break 82, it would leave short gamma market makers increasingly offsides, forcing them to buy Bitcoin to hedge and accelerate the rally. So before I go into it, there was a pretty good Yahoo Finance article kind of explaining it. Here's what it means. I'm not going to read the whole thing. If you want to look at it, it's pretty good. It explains how this whole breaks down. But I think at the end is the more interesting information in this context. So Bitcoin traded 80K headed into the speech, capping a rally of more than 20% over the prior week that was fueled largely by the Treasury Department's move to buy back more long-dated debt. Not by anything the Fed said. Then CME Fed Watch data, which converts bond futures pricing into rate move odds, showed traders had cut the odds of a September hike to 38.4% from 82% a month earlier, with the rest betting on no change at all. Warsh gave those traders nothing to reprice against, but the next rate decision lands on September 15th to the 16th alongside a fresh round of Fed economic projections, the exact kind of forward-looking signal Warsh spent Friday's speech explaining he'd rather not give. So we're seeing a huge options expiry, which obviously there's a lot of sell wall pressure. There is a buying pressure. But I also saw this tweet here, which I think for all of us not financial nerds, not economic Fed noticers, I don't know how I was going to end that sentence. Language, non-Fed noticer language. This explains, I think, in a very good easy way to digest. So shouts out to Penguin X, a DeFi strategist, on-chain data guy. And he goes, why can't Bitcoin break past $82,000? The answer lies in today's $6.4 billion contracts options expiring. And they literally happen at 8 UTC this morning, which was right before Kevin Walsh went on stage. And here's the breakdown of it. So Bitcoin climbed from 62 to 80K in a week, but every time it nears 82K, it pulls back. Now, we've all been watching it and wondering, is it just people selling? Is it just the huge sell wall? Does it also factor into the options? Well, here is where you start to see that the real action isn't necessarily happening in the chart. So Bitcoin is currently caught between two options level. At the top, it's 82K. Major Bitcoin holders agreed to sell their Bitcoin at 82K and receive premiums in return. At this level, market makers, aka dealers, are selling Bitcoin to hedge their risk as the price approaches 82,000. That's why every upward attempt gets stopped at the same spot. So essentially, you have a sell option or a put at 82K, and every time the price gets up there, you have to sell some Bitcoin. Now, going further, at the bottom, $75,000. The same logic works in reverse. Big players agreed to buy Bitcoin at 70K and pocketed premiums. Dealers buy Bitcoin as the price nears 75K, and that's why pullbacks have held steady above that level. And in the middle, we have 80K. So if all the options are 82, the short options or the puts are at 82, that means anytime the price goes to that level, they have to sell Bitcoin. Now we're seeing that on the bottom side, it was 75K. So anytime Bitcoin goes to that level, they have to buy Bitcoin. That's why the range has been narrowed. Now in the middle is 80K, which we've kind of been trending. It's kind of been right around 80K. And that is the level with the highest concentration of options. So when the price breaks above 80K, dealers sell Bitcoin. When it dips below, they buy. That's why Bitcoin has been hovering around 80K for the past couple of days. But today, this setup changed. The 81,700 Bitcoin options expire, a total value of $6.44 billion and about 1/5 of Deribit's open interest, which is a derivative exchange. The bulk of these call options at 75,000 and 80,000. In other words, most of the positions anchoring at 80K vanish today, literally this morning. The market is signaling what's coming. A week ago, investors were buying downside protection. This week, upside calls started trading at a premium over puts. There's a concrete example too. September 4th expiry above 82K, 2,000 contracts traded. If the price breaks 82K, dealers who were selling as it rose towards that level run out of ammo and the resistance evaporates. In my view, and kind of in my view too, Bitcoin should break past 82K. Now, what is interesting, and I was just explaining this to a friend, they were wondering what's going on with the price, and I was kind of explaining to them that there are, there are internal factors in Bitcoin that affect the Bitcoin price. And then also there are external factors in Bitcoin that affect the Bitcoin price, namely macro factors. So even though internally we're seeing this setup happen in Bitcoin, that, last week we saw all the short sellers kind of get wiped off the board. All of the short leverage got wiped off at 62. Then we went up into the 80s. And then the long, if you're watching, we saw a huge wick. The long leverage seemed to have got wiped. And now, what we're seeing, the options have expired today. But that is just the pure internal mechanics of Bitcoin. And then on top of that, we have the new Fed chair, Kevin Walsh, be hawkish, essentially saying, hey, we got a lot of work to do in inflation. Yeah, we might hike rates later. So the market is kind of trying to digest what the new Fed chair is going to say. And I think that's why we saw this move down into the 77K. But with this idea in mind, what I do find very bullish, and this is what I'm going to be watching over the weekend in terms of price action, is that 75K range and that 82K range. If we can't get lower than 75K, spot demand's back. Like there's a lot more call options for Bitcoin going higher. They have to buy a lot of Bitcoin at that 75K range versus the opposite, which as we look at the contracts, if we can get any information from those contracts, there is more call options at 75 than there are sell, puts at 82. Now, on top of that, we are seeing the inflows kind of come back. In the last 2 weeks, we saw about $3 billion come in on spot Bitcoin ETF flows. And I'll pull that up. Here is that. So 9 consecutive days of Bitcoin ETF inflows, or roughly about $3 billion, have flowed into the Bitcoin ETFs. More than the gross inflows of the past 10 weeks combined. Now, that was majority led by BlackRock. And I saw Dylan Leclerc. Shout out to our boy Dylan. I don't know if he works for Velo. I don't even know what Velo is. Just markets trading. But they posted this last night, and it's super interesting because we did see a move happen this morning, right? And it goes, price is up, funding is down, spot volume is up. So what happens next? Well, you know, Fed Chair Kevin Warsh talks hawkish and people start dumping their Bitcoin. But if the leverage is starting to get wiped, and now we basically can pull out that leverage because we will see another options expiry date in September. That gives us about 3 weeks or so to kind of build a strong position of whether we are completely out of the bear market or we will start to, you know, see a little more of a correction. But from the action I was watching this morning, it literally could not get below 76K this morning. It's literally happening right now. So it'll be interesting to look at the price after I do this rip on the break, whether we have been able to break under it. Maybe the chat can tell me. But I did see something interesting that I do want to slightly talk about for a moment. I saw a couple of bears on Twitter essentially saying that there is no spot Bitcoin demand right now. And they have their charts of, hey, look, spot Bitcoin demand isn't there. But from that analysis, I'm pretty sure they were not accounting for the Bitcoin ETFs as spot Bitcoin demand. They might be of the impression that spot or the ETFs do not actually buy spot Bitcoin. But I think, read another way, if you are looking at the more traditional spot Bitcoin demand, which would be characterized as retail, I don't think you're going to get the full picture. You need to combine the retail spot Bitcoin demand and the Bitcoin ETF demand, which is what I think Velo did here. If you look down here and it goes the aggregate spot volume, coins and standard. I'm pretty sure this is accounting for the ETFs and spot retail. And I know this is my favorite meme right now, but retail is being cooked right now. Big Bitcoin is scooping up the coin. Retail is nowhere to be found. Spot Bitcoin or spot demand is back, but it's coming from the institutions. It's not coming from retail investors. It's not coming from us here. It's not coming from a new wave of Bitcoiners adopting Bitcoin, being excited about what Bitcoin will mean for the future and, of course, what it means for their bags. No, it's coming from the spot Bitcoin ETFs, which is obviously a more recent development. Kind of makes me like, yo, I think everyone's looking in the wrong direction. I don't think people are looking at the information with a clear lens. Like, the market has expanded. And actually, on a side note, I don't know, did you guys see Robbie Mitchnick? He's head digital advisor from BlackRock. He said something yesterday, and it was something on the lines of Bitcoin will go up because BlackRock has expanded the market in Bitcoin because they've made it more accessible. The Bitcoin price is going to go up. Obviously, they're talking their own bags, and further, they're like, yeah, BlackRock is the reason for Bitcoin going up. I don't know about all that per se, but what we do know for a fact is the ETFs did expand the market that Bitcoin can tap into. There is more liquidity that can now find its way into Bitcoin. And I will add the Bitcoin treasury companies into that as well. Dynamics have changed a little bit. If you are just watching spot retail demand on exchanges, you are not seeing the entire picture. You got to look at what's going on with the Bitcoin ETF inflows. So, interesting stuff going on. I know I'm nerding out. I know I'm like full macro, nerd right now, but we are seeing some interesting factors play out. Again, internally in the Bitcoin markets as well as externally in the macro markets. The markets right now are reacting to Fed Kevin Walsh, Fed Chair Kevin Walsh. I don't think essentially the read of this is they don't like what Kevin Walsh is saying. Obviously, the initial read that everyone got from Kevin Walsh was that he was going to do exactly what Trump wanted to do. And I really do think there's some mental judo going on. And by doing what Trump wants is basically cut interest rates. Cut interest rates so that the U.S. can finance its debt, so that Trump doesn't have a huge tax bill. Then he comes out and says the exact opposite. I think he's trying, and by he, I mean Kevin Walsh, I think he's trying to make the case that he is an independent Fed, which is like a mental judo to the market, because if he comes out and he keeps signaling, I think we're going to have to hike interest rates, and there is a narrative that he's breaking from Trump's kind of dogma, then when he comes out and says, actually, we're going to cut interest rates, it looks, at least it reads as if he's doing this independently instead of just doing exactly what Trump wants to do. So I don't think we should be falling for this. I really think they're going to cut interest rates. That's pretty much all they can do. But we'll see. So we see that happening, and I think that's why the market is down right now. Again, Bitcoin just sniffed out what the market was going to do an hour or two later, because if you look at the equity markets, they're down. S&P 500, NASDAQ, Dow Jones. So Bitcoin just front ran that. Can we break under 75K? And I think that would be the real test here of whether this is a BART or a, we're going back down to lower lows. I don't think that that's the case. My read on this is just, it's a correction. And what we do know in Bitcoin, it doesn't just go up and to the right forever. It's not just omega candles after omega candles. In a bull run, Bitcoin does have corrections. And I think this is what I've been kind of saying would have happened. I'm like, that's why, remember I was saying, I'm like 90% convinced we are in a new bull market. And that last 10% is, I believe we'll probably get another correction before we finally lift off. Now, the real question is, how low will that correction be? If we are seeing this amount of options kind of continue to build up around 75K, I'm going to have a hard time to believe that we can get any lower now. Remember, I was saying yesterday, looking at the spot demand, that 62 seems to be the lowest range for me. I don't think we'd get any lower than that. And even that was a stretch in my mind. But now it's like, it seems like we're not even going to get into the 60K range. And if that happens, I'm like, dude, it's so on. It's on like Donkey Kong. We're ripping. we are ripping, boys. Yeah, I think we're in the, I think Opti is going insane just yelling at it. I literally am. There is no doubt about that. Let's see. One of the only, yeah, actually, Ron, good point. The only indicator that matters is the RSI, especially on the weekly chart. A little pullback would be good to cool it off. 100%. I was looking at that this morning and I came to the same conclusion. The daily RSI looks, you could say it's overbought. It looks, it's like, dang, it's a little high. How long can it go? But we know Bitcoin can stay irrational longer than we can stay, bearish. But when you zoom out from the daily to the weekly and the monthly, I'm like, yo, there's still so much room to run. Like we're not even close to overbought. And so I agree with what Ron said. A little cool off is good for the price action moving forward. Anyways, let's keep this show moving. I'm going to play our boy Hoffa, 21 Capital. He did a good clip on Bloomberg this morning. It's not anything we haven't heard before, but every once in a while, we got to go back and just, reiterate the basics. And then to wrap up the show, I'm going to try to do a shorter show. It's Friday, dude. Can I get a decent Friday here? So we'll kind of try to do a shorter show. I saw a couple of clips of Stan Druckenmiller. I'm not going to really read or watch all the clips because they are kind of long, but I am going to kind of use his framework and just show that this is literally what we do in Bitcoin. Like we literally are just Stan Druckenmiller acolytes, even though the real one is Scott Bassett, and there is a little connection there. So I'll be right back. You give me 1 second. I am going to have to refresh my browser for a second. So give me a second. First break. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. Even see anything. Okay, I'm back. Am I back? Yes, okay, I'm back. Jeez. All right, my streaming software is absolutely cooked. Let's see, can I even share anything now? Dude, what is going on? All right, let's see. Let's see if this works. Okay, hold on. Okay, I'm back. All right, well, I might have some issues, guys. But before I move on, of course, go download Keet, guys. We all know we're probably saying some crazy stuff in our group chats. And, you know, and that's if you're like one, you know, extremist here. But if you're just a normal person, all your information is being exposed to a company database. This is why we love Keet, because you don't have to trust a company. Everything is end-to-end, peer-to-peer. You can have video calls. You can use it as a Google Drive, you know, voice calls. All of that is peer-to-peer, end-to-end. None of it hits a central server at a company. And you don't leak your metadata. This is the greatest part about it. All you need is an email. That's about it to join. Nothing else. So you can create a group, share with your friends, you know, get your entire family on it. All peer-to-peer, end-to-end. I know there's some friction of trying to get your family off other apps, but Keet is literally by far the best messaging app you can use if you are concerned about your privacy and leaking your data. So go to keet.io/simplybitcoin. That's Keet, KEET.io/simplybitcoin. Download it, invite your friends, and talk privately and securely. All right, guys. So let me see, dude. Let's hope this works moving forward. Okay. So current Bitcoin price is 77,760. Again, if we don't break under 75, we're in it to win it. The discount from all-time high, 38.4%. Market cap 1.56 trillion. The block height for real Bitcoin is 964,465. So again, I don't know if you guys, well, you should be aware. Bitcoin Asia is happening right now. Biggest Bitcoin conference in Asia. Shouts out to the Bitcoin Mag team. I did see some clips coming out of it, but nothing too strong. I saw Metaplanet Simon say Bitcoin bear market is done. I saw something about a Pakistani official saying they are working on a Bitcoin strategic reserve. It's like, yeah, that's cool. But what I did see come out is that Hoffa of 21 did a little short stint on Bloomberg in China. So I'm guessing, you know, China's version of Bloomberg, though, you know, they're all speaking English. Ignore that. So I just want to play. I think it's good. Not only a good refresher of what Bitcoin is, it's kind of like the message going out to the normies, but where we currently stand. So here's that short clip.
Compare to Bitcoin, right? That should be the benchmark that will guide every single one of our decisions going forward.
What is that hurdle now? I'm curious.
Well, it depends, right? That's the hard thing about Bitcoin is that it's still in discovery process, right? Okay. It's a drop of the bucket in an ocean of liquidity, right? Look at Bitcoin, $1.5 trillion in terms of total market cap, compared to gold at 30 billion, real estate at 300 plus, right? So if you look at where Bitcoin is in terms of potential for savings technology, because ultimately I think Bitcoin is the best savings technology of the world, and is going to capture some of the monetary premium of these assets, right? I think if you look long term, Bitcoin has a lot of upside potential. Short term, if you try to measure what the benchmark is, it could be anything. Price in the short term can move anyway, because again, it's still an asset in discovery, right?
I mean, we're seeing a bit of recovery. I mean, 80,000. What do you think is driving that right now?
I think, first of all, the price was very depressed for a long time. We've seen this if you've been in Bitcoin for a while, right? It's, again, because it's still a nascent asset. The kind of interest that you see goes up and down with time. Yeah. And we were just at a period that, a lot of the interest that was driven by the ETFs, everything that we mentioned last year, dried down a little bit. And now it's coming back. So I think it was like a spring that was coiled and it's kind of like coming out. But as I said before, it's still a drop in the bucket on the ocean of liquidity, right? Sure. And on top of that, I think the recent macro events help Bitcoin. Bitcoin is a monetary asset that, different than anything else that we've ever seen as humans, it's extremely predictable. The monetary issuance is written in code. You don't have, 12 different Federal Reserve banks making determinations that are opaque, that you don't know what's going to happen. Sure. Treasury chairs coming in and trying to buy the long end of the curve. Nothing of that happens, right? It's extremely predictable. You know that every 10 minutes, a new block, on average, every 10 minutes, a new block is going to come in. 3 1/8 Bitcoin is going to be issued, right? You know that every 4 years that halves, it's all written in code, it's all transparent, it's all open source, and we've never seen this. And going back to Berkshire, Charlie Munger actually used to say that predictability should trade at a premium, right? And I think Bitcoin should trade at a premium exactly because the monetary policy, it's a line. You know exactly what it's going to be, for the foreseeable future. And unfortunately, we live in a world with a lot of uncertainty right now, not only politically, but on the monetary side as well. And I think that's what we're seeing on Bitcoin right now. It's a lot of like the realization that this is a very different asset from what we've seen before.
That's what I've been trying to get across. If you are following macro and geopolitics, and I will say even since November of 2024, basically since Trump's been in, you can sum it up with a simple phrase. It's uncertainty. There's been so much uncertainty of what's going on, and there has been active work on both sides, whether you're pro-Trump or against Trump, whether you're, a plan truster or a plan hater, whatever, I don't know. There's just been so much uncertainty. Even if you are following along and you can read what's going on, it's still been very difficult about what's going on. I just saw Sessions did it. I haven't watched it yet, but he did an interview with Tom Luongo, and the title was something like, it's been very confusing. I'm paraphrasing, very confusing about what Scott Bessent has been doing, but now you can kind of start to see the picture clearer. And of course, add a new Fed chair, which we're literally seeing this happen this morning. There's still a lot of uncertainty in the market. People are trying to digest what the new Fed chair's agenda is going to be. Obviously, the war in the Middle East. Now we have treasury buybacks. Obviously, Bitcoin's been in a bear market. Like gold's been ripping last year. Equities are pretty freaking hot. Trump comes out here one day doing something, one day doing the opposite. And I really loved that view, that quote from Charlie Munger, is that predictability should be trading at the premium. And I think in the face of everything we're seeing right now, that is just such a good way to continue to double down on Bitcoin. It's like Bitcoin is predictable. Yes, it's volatile. You know, maybe for the NPCs, the NPCs out there, it's hard to wrap your head around the idea of like, how could Bitcoin be predictable if it's volatile? It's like, we're not saying the Bitcoin price is necessarily predictable. It is volatile. But what is predictable is the issuance of Bitcoin, the blocks coming in, the fundamental nature of the network. We know what it's going to do. We know what it's going to do for another 100+ years. There is no surprises going on. And I think that part of the price action we've seen, especially now that the debasement trade is going up, that the concerns over debasement are at all-time high, and gold's doing well and Bitcoin's doing well, and the correlation of Bitcoin to equities is kind of breaking, and Bitcoin and gold seem to be catching up to everything else in like percentage terms, that maybe we just are starting to see the mental shift of people realizing, yeah, an alternative asset, an alternative monetary network that is predictable is highly valuable to me. Yeah, maybe I don't know what the gains are going to be, but I know what Bitcoin is going to do. And further, I do know that there's probably a lot of upside to Bitcoin, and maybe I want to capture some of that. And remember, I think I said it on Monday. I don't know. This week's been a blur. I think I said it on Monday that just imagine if Bitcoin is capable of attracting a couple trillion to its market cap very quickly, a portion of gold's market cap very quickly, a portion of global savings very quickly. It could happen slowly, but if it does happen quickly, that feedback loop is going to be incredible. And I think, kind of jumping off the back of what Matt Cole said on, was it Wednesday's show? Dude, I don't know days anymore. I think it was Wednesday's show. I think we're setting up for a very bullish bull market. But hey, it's my job to be bullish, okay? It's my job to, get high on my own supply and spit the hopium because I believe in the hopium, okay? So I'm feeling pretty good. I think we're in a very good place in Bitcoin. I think not only are we in a good place in Bitcoin internally, but we're in a very good place of the narrative around Bitcoin, how people are starting to view Bitcoin. And that is a kind of watershed moment. Bitcoin hasn't changed. I mean, arguably, some people might say that it's changed, but Bitcoin hasn't changed. It's doing the same thing it's always done. But what has changed is how people view Bitcoin in their portfolio, how people view the use case of Bitcoin, how people view the value of Bitcoin. And that move could be very aggressive. It literally, I think I've said it in the past before, and I'm not the only one to say it, but it's like the revolution is in our mind. The revolution is between our ears. Once people understand everything we've been saying, and maybe that's an attack on us Bitcoiners. Our narratives have, our orange pilling hasn't always been the best. Maybe we do have to alter. And I'm like a broken record on that. I constantly say, it's like, dude, we just suck at orange pilling. All right. Like, meet the audience where they are, dude. Stop talking about the Fed. Stop talking about 1913 and people losing, getting their purchasing power destroyed. I commented on the Simply Bitcoin Twitter. I commented on my account run by the Zoomers, like something on the lines of, at what point or how bad does inflation have to get before people start to invest in Bitcoin? And I simply responded, I'm like, dude, people don't care about inflation. Because as inflation goes up, what does the majority of people ask for? They just ask for more taxes on the rich. They don't understand how this mechanics work out. Like the pain mechanism of depreciating your purchasing power, I don't really think affects that many people. They're just like, whatever, as long as I can watch my Netflix and eat my McDonald's and, go to the beach and get drunk and doom scroll TikTok, I'm good. But what could fundamentally drive that dopamine receptor to fire this number go up, guys. I'm telling you, dude. Side note, PodConf is right. Wait, no, I didn't say that. I didn't mean that. Don't clip this and send it to PodConf. But I do like the recent memes. So it's an old meme, but it's starting to hit a little more. What do they always say? Price is the only thing that matters or something. I forget what they said, but it's so true, dude. The masses will respond better to the dopamine high of number go up versus the psychic pain of inflation and destroying their purchasing power. I might have to die on that hill. Dude, did I just get myself PodConf approved? My street cred is cooked. You know, Dr. Dan was right. I am a suit coiner now. I've lost my way. No. I'm a number go up maxi. Number go up brings freedom go up. And it's a beautiful feedback loop. All right, guys, I'm going to keep it moving. Enough shame.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. I want to give a shout out to our sponsor, Keet. If you own Bitcoin, the next question is how you actually protect it. Keet takes a different approach to self-custody. It uses a 2 of 3 setup with keys split between your phone, your Keet hardware wallet device, and block servers. You only need 2 keys to authorize a transaction. So losing one doesn't mean losing your Bitcoin. And Block only has 1 key, so they can't move your Bitcoin on their own. There's also no seed phrase to write down. Hide somewhere and hope nobody ever finds it. Recovery is built in, so if you lose your phone, replace a device, or something happens years down the road, you have a path back to your Bitcoin. And the Keet hardware wallet now lets you verify what you're actually signing directly on the screen. So instead of blindly trusting an address, you can confirm the real destination on Keet itself. It's self-custody designed around what actually happens in real life, from lost devices and mistakes to long-term ownership and inheritance. Get yourself a Keet today and use promo code SIMPLY to get 10% off your new Keet. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or hivedigitaltech.com.
Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, cell towers can fail. Hurricanes, cyber attacks, blackouts, most people go dark. Satellite phones don't rely on local infrastructure. With Iridium, 77 satellites in orbit, you can stay connected across the U.S., even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123 also has Starlink, battery backups, Faraday bags for your hardware wallets, and everything you need to build your own off-grid Bitcoin citadel. Go to sat123.com/simply and use promo code SIMPLY for 15% off anything in the store. Yo, the Rumble chat is so unhinged. Y'all like crazy. What are you even talking about over there? Oh man. Sorry, guys. I need to keep my professionalism. But yo, the Rumble chat. What are you guys even talking about right now? Y'all are y'all in a weird place. Anyways. I saw a couple of clips yesterday. I'm not gonna play them all. I'll probably play you this first one because it's short, but the other one's like a 30-minute conversation between Stan Druckenmiller and Paul Tudor Jones, which are obviously, as you may know, they are Bitcoiners, which is probably the only reason why I'm bringing this up, because it's interesting the parallels that we're seeing right now. So here, let me just play this one real quick, or yeah, I'll just play it.
A lot of my style is you build a thesis, hopefully that no one else has built. You sort of put some positions on, and then when the thesis starts to evolve and people get on and you see the momentum start to change in your favor, then you really go for it. You pile into the trade. It's what my former partner George Soros was so good at, and we can call it, if you follow baseball, it's a slugging percentage as opposed to batting average. A lot of my stuff.
Okay, again, you build a position, and then when that thesis starts to move in your favor, you go all in. Now, us Bitcoiners, like us average Bitcoiners, yeah, what's your edge exactly? I think we're kind of we probably do this process a little backwards. We just like pile in and we're like, yo, it's gonna work in our favor. But damn, I forgot I have no cash. I can't buy any more. But again, I saw another one on here, and this one is like a 30-minute interview, so I'm not going to play the whole thing here. But I found it kind of interesting because he's saying the same thing in a different way. And also, obviously, when I saw these, I'm like thinking, man, dude, we're so right when it comes to Bitcoin. Like, it's so obvious to us, you know, but it's not obvious to other people. Anyways, it goes, Stanley Druckenmiller, billionaire investor, also a Bitcoiner, averaged about 30% a year for 30 years without a single losing year. Paul Tudor Jones, another Bitcoiner, asked him on stage what made him different from everyone else, and his answer is size. I put a 350% long into one bond trade, 200 to 300% of my fund into a single currency. I put all of our eggs in one basket, and you just watch that basket carefully. I've never used a stop loss in 40 years. I exit when the reason I bought changes, not when the price is down. The world changed on 9/11. The world changed when the wall came down. The world changed election night, 2016. These moments set in place 2 to 4 year trends you can play. And if you want to see this, there's a whole 30-minute interview about it. But I found this tweet very interesting because, dude, he's just like me for real. I've never been around. I haven't been around for 40 years, but technically I have no stop loss on my Bitcoin position. Actually, I don't own any Bitcoin position. But again, it's like you just make a huge bet on a single currency. I heard that and I was like, yeah, you just make a huge bet on Bitcoin, the biggest bet you can make on Bitcoin. You sit there, you watch your basket correctly, safely, you safeguard it, you self-custody that Bitcoin, you figure out how to secure that Bitcoin. You keep adding to that position when the market starts to move in your favor. We've made a bet. We've made a thesis. Bitcoin will go up. Number will go up. Bitcoin will fundamentally change the course of human history, of financial history. It's just everyone else doesn't realize it yet. Ow. Dude. Sorry, guys. I just realized the button on the top of my hat and these headphones are killing me. We've all made a very strong bet. Now, I know a lot of Bitcoiners do, well, not all of them, but some Bitcoiners do talk about diversifying. But like, I'm youngish. Maybe not as young as I want to be. But I think for most of us, like the best financial advice you can get is like, just go all in on Bitcoin. You know, you hear it from like the right-wing side. It's, you know, rest in peace, Charlie Kirk. But you hear it from him all the time. It's like, you know, have more kids than you can afford, etc. You've heard that before. I'm like, dude, just go in all in on Bitcoin. Probably more than you're comfortable. Not financial advice. Obviously pay your bills and all that good stuff. And that process will teach you what you need to. That pressure will teach you what you need to withstand multiple bear markets, multiple cycles. But obviously, you know, Stan Druckenmiller, Paul Tudor Jones, they're billionaires. They've you know, billionaire fiat investors, if you want to use that phrase. But they're still telling us a lot of information that we obviously could use and adapt to what we're saying. Like, we are the new Vanguard. Yeah, we're not as rich yet. We don't have as much wealth. We don't have as much clout yet. We are still in a nascent asset. It's still a new thing. It's still kind of novel. But are we not all kind of doing the same thing? Just like go all in on Bitcoin, figure out how to secure that, protect that, and then further get more information, build your case even stronger, go in even more, make sure you're making more cash. And, oh man, let it rip. Hold on, guys. Dude, I'm having all kinds of issues today. And it reminds me of a tweet that British Hodl said the other day. And I know British Hodl's been getting kind of a lot of flack because he's gone full big Bitcoin. You know, he's a full Larry Fink acolyte at this point. But I do find some of the tweets he's saying with it, which are actually kind of hilarious. Like, I think it's so funny trolling about big Bitcoin, but he's like actually serious about it. But hey, big Bitcoin's here. They're in control. They're going to pump our bags. I think we should, you know, move with the current instead of trying to fight the current. Take over from the inside. But he did a meme. What was a tweet? And it is going to connect to this. All right. It is going to connect to this. And then I'll probably wrap up. Is Opti having a stroke? No. No, dude. The camera was blurry. Whatever. Hodl said something. British Hodl said something that it was a good tweet. It was actually a really good tweet. And he said something on the lines of like, Bitcoiners suck at orange pilling. If you want to get to the younger generation, don't talk to them about dollar debasement or, you know, the censorship resistant stuff. Yes, I'm a fan of it. That's, you know, there's many variables that I like about Bitcoin, or rather many characteristics that I love about Bitcoin that I think will usher in a better world. But he's like, if you want to get to Gen Z and Gen Alpha, then you got to show them how they can make money in Bitcoin, how they can get wealthy, how they can improve their lives through Bitcoin. And I was like, man, honestly, not the biggest fan of you, you know, glazing Larry Fink all the time and BlackRock, but I understand what you mean. And I'm not going full just number go up, you know, like just show people on the plan B stock to flow model, which I have done. Okay. I've made my mistakes. But there is a key insight into this. I did start this rant by saying essentially, like, go all in. Just, you know, put as much as you can in Bitcoin and ride it. But I think in that does have a kernel of truth. Of yes, we love number go up. Look, price has been going up. We're having a little fun. We're celebrating all of the new climb upward, you know, all the price action upward as all-time highs. And just because we're celebrating about the fiat value of Bitcoin going up does not necessarily mean that we are fiat maxis. I think what it is signaling to a lot of people is this can improve your life. And whether you like it or not, I don't know where you live in the world. But in the world that I live in, I've never seen an unhappy person on a jet ski, which is the idea of, yeah, money can't buy you freedom, but it can definitely make your life that much easier. So the game of wealth accumulation, which is something I've seen recently, is this kind of pushback, this mental block on success. That if you are successful, you must be a bad person. I think we need to co-opt that and flip it. It's like, no, I want you to be successful. I want you to see number go up and your life change. I want you to be the smartest person, because if you're the smartest person, that's most likely going to mean you are a more successful person in society. And if we are the more successful people in society, then we can actually change things. That's why I was kind of like, damn, British Hodl's kind of spent some bars. We got to show people that, yes, one, go all in on Bitcoin, dude. Make a bet. It's going to pay off. Especially, we know, well, look, I can't guarantee it, but we know it's going to pay off. Get wealthy. Get yourself mentally, physically, spiritually fit. Become a walking billboard for Bitcoin, aka be successful so that other people can see that you're successful. And that success, I think, breeds more success. Do we not all want to be the smartest, richest people possible? Does that not prove our thesis that we knew what the hell was going on while the world was collapsing, while the world was chaotic, while there was more uncertainty than ever? We made our bet in Bitcoin. And hey, look, guys, you may not understand this, but we are going to fix this. We do need a very highly motivated and intelligent minority that is going to fix things. I'm becoming more radicalized for doing this show, but it really goes back to that meme of it only took 3% of the American Revolution to usher and give the world America, the best country in the world. 3% gets to 20%, 20% gets to 50%. Then finally there's a tipping point, maybe over 51% or something, the 100th monkey idea. But we are still the minority here. And I don't think we have fully proved our thesis yet. Yes, the OGs hit their 100K price point. But when we start getting into the 6-7 figures plus, that's when we will have real capital, not just in terms of financial, but social capital as well. And I think I was thinking about this during the week. I know a lot of Bitcoiners are really jaded with the political process. And I am too. But I'd much rather have our people in positions of power than, the opposite, than our enemies be in those positions of power. So look, I'm not going to say flip-flop on politics, but we can't ignore politics. It's here now. They're trying to regulate us. They're trying to pass the Clarity Act, which is probably going to be atrocious. And, I'm not the biggest fan of Dennis Porter's tweets sometimes, but I think there was something to what Dennis Porter said. Like, we need Bitcoiners in positions of power. Like, if you're young, most of the people that watch this show are probably like 35 to 55. So this message is probably not for you. But if you are a younger person, if you're in your 20s and you're watching this and you're in Bitcoin and you're stacking Bitcoin, get yourself in a position of power. Don't tell them that you're a Bitcoiner and you're here to end the Fed or any of that. Just be a normie, be a chameleon. And then maybe we will get Bitcoiners everywhere. I think that's the true lesson here. Well, the bull market needs to start for us to be wealthy enough to show people that Bitcoin works. I agree. Time to get a job, Opti. Yeah, I agree. For whatever buys the Lambo. Unsubscribe. Enjoy staying poor, chasing a fiat-based Bitcoin lie. Watch it die by 1,000 cuts. Wow, I had 2 gals go to Bitcoin blink. Dude, have fun on your shitcoin, bro. Yes, Chef Tommy. Yes. This is what I'm saying. I know a lot of you guys don't like British HODL, but kind of spit bars on that one, guys. All right. It is what it is. All right, man. Well, it's Friday. I went longer than I wanted to today. It's the weekend, boys and girls. The call of the weekend is pulling. So we'll be back on Monday. I hope you guys have a good weekend. I think I got one more meeting, guys, and I think I'm gonna go get a ribeye. I'm gonna go to the Argentinian steakhouse, get a salad, a ribeye, maybe drink some wine. I'm gonna take a nap all weekend. I'm gonna be relaxing. Dude, we're in the bull market. Kick your feet up. Let's relax. Let's eat some good food. But I'll be back on Monday. Unfortunately, I'll be back on Monday, 12:40 p.m. Monday through Friday. You know, to the guy that says I need to get a job, dude, this is a job. 5 years. Look, I know I don't need to do this, but guys, streaming 5 days a week is not as easy as it seems. All right. How you buying those ribeyes, man? Cause I'm rich. No. Yeah, dude, all I spend my money on is food and Bitcoin. It's all I spend my money on. All right. Salad, not necessary. It's not, but it tastes good. All right. I'm not a carnivore. I'm carnivorous, but I like a salad here or there. I like bread. I like carbs. I like fruits. All right. Yeah, maybe they're unnecessary, but they're delicious. Dude, don't take everything away from me. All right. Don't take anything. Christine Lagarde's buying. Yeah. Chrissy's buying me. Look, I got it. All right. I didn't want to say it. I'm going on a date with Chrissy. All right. She's buying me a ribeye. We're going to drink some wine. Maybe we'll have a good night. All right. I'm done. All right, guys. Have a good weekend. I'll see you on Monday. Peace out, boys and girls.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.